Good morning, Flagship Harbor Advisors. Eric Jefferson with the core team. Today is Monday, May the 9th. Just a reminder, this replay is for advisor use only. Hope everyone is doing well. To start the week, yields flat to modestly higher, stocks lower, and that was following a flat week last week, although it certainly didn't feel like it. A lot of volatility, specifically on Wednesday, we saw the S&P rally near 3%. That was following Powell's announcement that a 75 basis point rate hike was not being considered, at least at the moment. And then 24 hours later, once traders had a chance to digest those comments, you saw the market give back the gains from the day before and then some. And really, I think the story there, stocks initially rallied as Powell took a very down the road path, did not come out too hawkish. But then the end of the day, once markets had a chance to digest those comments, whether it's a handful of 50 basis point rate hikes or a 75 and a few 25s to follow, the end of the day, higher rates are here. Higher rates are going to continue as that's what's necessary to at least try and reach the inflation targets Powell has come out and suggested their focus will be. We also saw Powell shift his narrative a little bit. You recall when he initially embarked on a higher rate regime back in March. He made it very clear in his comments multiple times, the U.S. economy is strong. Now you heard him suggest there's a good chance of a soft or soft-ish landing, certainly not reinforcing that same degree of confidence that we had a mere 3 months ago. We touched on this in the client letter last week. I'll include that in the email here. If we didn't technically enter a recession, now there's a chance we're in one right now. We wouldn't necessarily know until July after receiving a negative Q2 GDP print. But if we did get one, in my opinion, would not be as significant as historically recessions are. On average, PE is decreased 13x. If that did play out, obviously equities have a much lower move to go. And while I never want to say this time is different, if we do take a step back and just look at the broader macro picture, obviously the inflation and interest rate story have driven markets and stocks year to date. But if we look at the macro environment, fundamentals are still somewhat encouraging. Q1 earnings, up over 7%. If you strip out the brutal Amazon report, you get low double digits. Companies have a 80% beat rate thus far. Granted, not beating by the significant figures they did in prior quarters, where a lot of that was playing catch up from the reopening. Also, when we do think about the negative Q1 GDP print, that was a function more of 1/3 of our economy that is government spending. You saw government spending obviously cut, but 2/3 of that being the consumer. Consumer spending has remained fairly encouraging, at least today. Now, obviously, if inflation does not at some point begin to peak and subside, revert lower, that likely will have an impact, but thus far has not been a challenge, which again leads me to believe if we do get some positive news on inflation, that will give the Fed little bandwidth to not move forward as hawkishly as they've indicated. I think that could actually set up a nice rally if those two things do play out. Turning to the fixed income world, we have, as of 10:30 this morning, 10-year yield just shy of 317. And one thing to keep in mind, at this point, the market is pricing in 10 rate hikes. So if you're betting against bonds, you are in essence betting that there will be more than 10 rate hikes. In my opinion, again, don't want to say this time is different, but I think that's very unlikely. Given how somewhat fragile the economy is, and also coupled with the fact of how closely Powell watches markets. Obviously, that's not an official mandate of the Fed, but clearly, he keeps a close eye on his policies and overall risk asset pricing. Going back to last week, some somewhat encouraging news on Friday. Saw non-farm payrolls increase above expectations. That has pegged unemployment, kept it at 3.6%. Now, that being said, if you look deeper, those figures maybe aren't as encouraging. We saw some prior months revised lower. I didn't get a net increase in hours worked, and some of those ratios of employment to population remained somewhat flat. On the geopolitical front, today is Victory Day in Russia. Expect to hear from Russian President Vladimir Putin. Key thing to focus on there, as if you see a shift in the language regarding Ukraine, whether that is upgraded, so to speak, from a special military operation to a full-scale war, that would have some broader implications with respect to the amount of effort and energy Russia can put behind it. And then turning to the week ahead, this is inflation week, CPI data on Wednesday, PPI data on Thursday. Broad expectations are for inflation to come in from 8.5 last month to 8.1 this month, with core PCI falling from 6.5 down to 6. I imagine if those figures do play out, you will hear a lot of the inflation has finally peaked narrative, which likely would give risk assets a modest boost over the short term. Obviously, again, when we think about inflation, not going to get back to that 2% long-term average overnight, certainly not by year end, but I think markets, as they are forward-looking, will be encouraged if we start to make progress. That will give the Fed, again, some flexibility or bandwidth to take a more dovish tone. The challenge obviously remains, though, as much as inflation has been a function of a zero interest rate environment, there are a handful of things, a la supply chains, energy costs, and COVID restrictions in China that are responsible for a good portion of those inflationary pressures. Again, interest rates won't necessarily do anything to solve those. So there is a little bit of wishful thinking. Things from a global economic standpoint will continue to improve. Obviously, all of those points are ones we'll continue to watch very, very closely and report on if there's anything worth sharing. That's all for now. As always, please let Michael and I know if there's anything we can discuss in more detail. If you don't connect, have a great week. Take care.